The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the day like we always do across the pond at the German DAX. This was furnished to us by someone across the pond. It's a daily chart of the DAX going back well over a year and a half. You can see the two beautiful head and shoulders patterns on this chart. They're both nearly perfectly symmetrical. Of course, the one on the bottom is absolutely perfectly symmetrical. The one that we just had is a little bit skewed, and it tells us that we're getting up near this 18,000 level. Let's try that again, 10,800 level that we've been in for well over a month. Now, if we get just above that by just a little bit, right at 10,900, it's going to hit the 78% retracement of that move. All I'm doing is to point out here that we have some divergences in some of these markets. This is one of the more bullish ones. If you look at some of the others, they're actually a lot weaker when we're talking about Asia. China looks terrible. Hong Kong really doesn't look very good at all, as we pointed out yesterday. And of course, the Nikkei, even though it made a 61% retracement, it sold off for a couple days here. So there's a little bit of divergence here, but not very much. But the market continues to go a little bit higher. Now, the first thing that we've had today is someone's asked a question about the crude oil market. And so what we're going to do is to bring it up over the last few days, because of this level that we had up here at the 52.25 level was so important as far as a breakout. And as you can see, it did go up into new high ground. We got up to 52.40. At that point, we completed a ABCD butterfly pattern. And since that time, as you can see, we've sold off $2 a barrel. We're now down below the 78% retracement. Right now, this looks like it wants to get down into the strong support that should come around the 49.40 level. By the way, we will have Bill Meridian from Cycles Research on today at the half hour, so please stay tuned for that. He always has some great information for us to really keep a close eye on. Now, one other one that I wanted to mention that someone asked about, and that is the relationship. And it's quite an unusual relationship here between the XAU, which is the gold silver miners, and also the gold index. And if you'll notice this chart here, this is a chart of the gold chart going back well over a month. And as you can see, we've come down $170 in a month. Look what's happened since November the 3rd. November the 11th, folks. We've been in an uptrend in the XAU. It doesn't make any difference what happens with gold or silver. This index keeps going up. Now, I know you're probably thinking, well, this is related to stocks. Well, part of it could be, but part of it, this thing has such a high correlation that it's very, very unusual. And as you can see here, over the past 7 or 8 days, there has been no correlation at all. The XAU has been going up and gold has been going down. Now, silver and platinum have both been going up, so it's only the gold. Now, there's a reason for that, supposedly, from our good friend Sam Crawford, Arch Crawford of Crawford Perspectives, and that is it's coming from India. India has put a law in that people are not able to own gold, and that has taken a great deal of gold out of the market. There's been some political things that have happened over there. Whether that's going to continue or not, we'll have to wait and see. But if you remember, and I know you can't remember because it's too far along, 1932, we had a law passed where people had to turn their gold in. And there were some people that did turn it in and got their $32 an ounce. So we'll be able to see what's going on, and we'll wait and see what happens with this. But frankly, it's going to be difficult for people that are so accustomed to gold like they are in India. I don't know if you've ever been to an Indian wedding, but that's one of the things that they give to the bride and groom as part of their presence are gold jewelry and gold artifacts and gold and silver, or gold. They don't even mess with the silver. So that's not going to change, very much. Okay, we've had one other question, and that's about the NASDAQ, and we're going to put the NASDAQ in here to let you see it. This is the NASDAQ 100. It has been by far the weaker of the two because, this is the big one where they have the really heavily priced stocks. All the FANG stocks are in here. But you'll notice here that we had the head and shoulders pattern that formed over September. It was here again, it was a perfect one where the two shoulders were equal and the head was just slightly higher. And they were right at, timing-wise, were perfectly, and we came down and just missed the 61% retracement on Sunday night after the Italian election. We missed it by about, looks like about 15 or 20 points, and now we're rallied back into this 4,800 level, just a little above the 4,800 level one more time, which means we'll be getting up here most probably today somewhere near the 61% retracement. Now we've made a 78% retracement back in the S&P 500, and also with the Dow Jones. If you remember yesterday, we pointed out that the Dow had made a three drive to a top pattern on the hourly chart. And I wanted to bring this up to let you show it to you because this is pretty much where we're trading right now. This was as of yesterday morning. And all we've done so far is just back off a little bit, and we're now trading at around 19,220 to 230. We haven't quite made a 61% retracement back yet on this particular index. So that's one that you want to watch also, because there's a possibility in here that there's some of these patterns that could be, lining up. Let's just take a quick look here at the. I want to just show you something. This is the New York Stock Exchange Index. This is the big picture going back over the last 4 months. And we'll just take a quick look at this here. You'll notice when we made our bottom here, this is, remember, this is an hourly chart, but you'll notice the red box that I have marked in there. You'll notice the easy to see three drive to a bottom pattern. It's just as perfectly symmetrical as you possibly can get. And look what we have forming today. We're seeing that same type of pattern. So a little bit higher opening here in the New York Stock Exchange Index would complete this pattern. Now, will it be a good pattern? God only knows, and she doesn't trade. So you're going to have to decide, if you want to take this, because at that point, you don't have to risk very much. Now, one of the things that we want to do is let's just blow this up and see what's happened here over the last month, just so you can see it a little clearer. As far as what the pattern is showing. I think this is the one that gives you a better idea of what's there. You'll notice on the bottom, you'll see the beautiful three drive to a bottom that occurred. And then you'll see the gap. If you get that, then you've got a big winner if you should get that. But you'll see where we are now. That takes us up just another a little bit from this level right up into 19,000 or 10,900 and 10,942 would be the number you'd be watching. But the patterns are very, very similar. I mean, they are the same pattern. They're a three drive pattern. They don't work all the time, but when they do work, they work extremely well. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next chart we're going to take a look at is the U.S. dollar chart, the dollar index. This is a very interesting one because we have the same type of pattern that we've seen in the NASDAQ and also in the crude oil. You'll notice that once we got to this level of 102, which basically completed the very large ABCD pattern, if you'll notice what's happened over the last week, take a look at the down-sloping line to the far right. That is basically a 1-3-5 pattern where you have the lower highs. They are perfectly symmetrical. In other words, from high 1 to high 3 is perfectly symmetrical to 3 to 5, and the ratios are exactly 78% retracement on both of them. This is what happened when the euro went down and went a little bit below the 105.25, taking out the previous low by 6 pips, and then promptly rallying well over $3,000. Shucks, I thought I put the chart up, didn't I? Well, maybe a little extra incentive here. Sorry, folks, I didn't have the chart up. But anyway, the two things to pay attention here is the fact that the large ABCD pattern was hit right there at the 101.60 level. It got to 101.90. You'll notice on the little downtrending line, I wanted to put it there to show you the 1-3-5 pattern. That's why it's so so important. So keep an eye on that one because we should come all the way down to the 98.80 level, down about another 120 points. That's the spot of the old breakout, and that would also be a retracement from the low that we made back in November during the election. So keep an eye on that one also because that's going to be real interesting. The number is actually just around 99 even in the dollar index. We should get there. That would be equivalent to about 109 and change in the euro if we're able to get that. 98.80, you're absolutely spot on, Mr. P. That's it. That is the number. Between 99 and 98.80, that's the number you want to be watching here. In that means the euro's got a little bit more to go to the upside. And if the euro can get above that 108 level, the next level is 109.50. So it's got a pretty good chance. The euro's made some type of a major bottom, folks. I don't think there's any question about that. We had a lower low on the year by 6 pips, and the market completely reversed. And so that's usually a sign that, things have changed over there. But, of course, like we always say, any market that can give you that much can certainly, take that much against you. Now, there's a little bit of strength in the DAX today. We're up about, 0.25%. We're approaching that 108 level that we've talked about several times. But there's still a long way to go. Now, the other markets that we look at across the pond, and also, in Asia, they're all looking very, very poorly. There's just there's really no other way to describe it. We put the Chinese market in here several times. We'll put it up here again to take a look at it because we were down again today in China. And you'll see that this is what we've had. We had a 61% retracement last week, just like we did in the Nikkei futures from Japan. And so these markets have started to turn lower. Even in the emerging markets, which has been, really been battered here over the last 6 or 7 years, has started to weaken. And if you'll notice here, that the emerging markets after the election could hardly even rally at all. It couldn't even make a 382 retracements, and now they're turning down. So we'll follow these as we go. But if we had turned into a lot of strength here, we could be looking at a major explosion of some type that would make these markets go crazy to the upside. We're not seeing it in the advanced decline. I'll bring this up to you again to let you see what's happened even yesterday with the strength that we had, which was minor, but it was strength. And we did not make new highs again in the, we didn't even come close to new highs versus new lows, which is another divergence that is usually troubling. But as they say, the old Chinese curse, may you live in interesting times, has certainly, come out to play this time because markets they're just dancing to the tune of a different drummer, as they say. I'll tell you, folks, what's really surprising to me is the strength that we're having in silver and gold. I can see the strength in copper. Everybody's thinking, that copper is back in a bullish play and, it's going to have a lot of resistance up between 275 and 280. Those are some major numbers up in that area, but the strength that's happened in silver and platinum is really quite amazing because of the fact that it's held up, so very well. Now, we have a question about the Treasury bonds. As you know, we're going to have a interest rate increase. They've just about did everything but mail letters out to everyone that they're going to have probably a quarter or maybe even 0.5%. 0.5% would be a surprise, but I would imagine they're going to do it slowly at 0.25% increments to see what's happening. But rates have been going higher since July. There is absolutely no mistaking that. All you have to do is look at the price of bonds in July at 177, and you look at them now at 150 and change. That is an increase in interest rates. The Fed is just behind the curve on this one, so you want to be able to keep an eye on that. The rates are going to go. Now, after they announce this, don't be surprised if you see a rally because everybody has already anticipated this, much like what happened with the election. Everybody knew that, Hillary Clinton was going to win. I mean, no one thought Mr. Trump had a chance. He had no ground game. He was using 30% of the money that she had I mean, and there was nobody on his side of the table. So it was, a big surprise. But people were just tired of the same old rhetoric, I guess, and that's what happened. So we'll wait and see what's going on. Now we got to switch and go across the pond quickly here before we have our good friend, Mr. Bill Meridian from Cycles Research in Vienna. We want to look here at a very interesting stock that we've been following for quite some time, and that is the Deutsche Bank. If you'll notice, if you see the bottom that we made down there at the 1.618 expansion, you can see it by the two red boxes. This is an old chart. All I did was just update it last night. But you'll notice the importance of that number. We hit that number within 4 cents being the exact number, and then we've rallied. You'll notice that we're completing an ABCD pattern today, and believe it or not, the Deutsche Bank is actually trading above $17 a share. I believe the last quote I saw was around $17.26. So that's going to be completing a retracement. And if you'll notice that retracement that we've had from September through December, go back and look at what happened between February and March. You're going to be seeing the exact same type of retracement where the market went from $13 to 21. This time it went from 11 to 17. Both of them were the same amounts, around $7. So this is what you're watching here with Deutsche Bank. So keep a very close eye on this, because I guess there's a possibility that the bank has solved all of its problems, and which would be a big surprise, but we'll see. Stay tuned for Bill Meridian of Cycles Research, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got Bill Meridian of Cycles Research in Vienna, Austria. Bill, how are you?
I'm fine, Larry. How are you?
I'm good, and thanks for joining us today.
Sure.
I've got your first chart up on the economy. You want to start with that one?
Yes, this is the Business Activity Index for those who are not familiar with it. It's an index that was created originally by Ameritrust Bank, and they took every bit and scrap of economic data they could find going back to 1780 and created an oscillator out of it. That's the black line that you see. So in other words, 100 would be normal economic growth, which is about 3% annually, and fluctuations around it are deviations from what is normal. That's in the graph that I sent to you. And as my subscribers know, that this, I did a very long-term study on this. It's in the book Planetary Economic Forecasting. The shortest cycle it was effective was 12 years. The longest was about 38. And that turns up at the end of next year after being depressed for about 8 to 10 years. And so what you see here is a very short-term version of it, and the most accurate cycle right now currently is the 40.4-month cycle, which, as you can see, is bottomed. Mm-hmm. And so by the time this tops out, which is in the summer of next year, the longer-term cycles are going to be bottoming. So I think the economy may have hit a low. And as you may have read in my monthly report, when I was in New York, I saw help wanted signs everywhere, mostly for servers in restaurants, bartenders, drivers. And so it appears to me that the level of activity is picking up, and I've never seen so many empty storefronts in my old neighborhood in Greenwich Village, Tribeca, Soho, and my friends tell me it's true all over town. Mm-hmm. That may be partially due to the internet, but so that's the economic forecast, and to support that, the index that you see is currently updated by the FRB Index of Industrial Production. That translates directly into tonnage, profits, and sales for the air freight and the trucking companies. And within the Dow Jones transports, which have been very strong, the two strongest components are trucking and air freight. So it seems to me that the stock market is now picking this up, is now recognizing this upturn in industrial production. At the same time, there is a crisis cycle that I mentioned before. Number one, it's a year ending in a 7. 2007, we had the great crisis in the real estate banking area. 97, it was in Asia. 87, the stock market crash. That was also discovered by forgot his name, but Ameritrust Bank. They also came up with this business activity index. So this, there's two other cycles. My panic cycle turns up and hits a peak next autumn. Most panics occur in the autumns of years ending in 7 or 8. On top of that, number 3, Saturn will hit the Mars-Neptune square in the USA horoscope. Robert Gover wrote a book about that, saying it usually coincides, which he calls them crises, I would say deflations. But I would say it's already starting to take place. In the art market, I've talked about this every time I'm on your show. 2 years ago, the art market started coming apart. Now the bond market. Government is the most inflated area. Too many people working, too many government programs. That's trying to deflate. And of course, the reaction is to try and tax everybody or to stay afloat at any cost. And private equity. Now, just a couple weeks ago, I talked to a bank in Dubai. And they said to me, if this crisis is going to begin in private equity, they said the Singaporean banks are leveraging projects that are they're leveraged 7 to 10 times. And if my forecast on rates is right, none of these models or none of these plans have incorporated rates above 3%. If rates go above 3%, a lot of these deals are not viable any longer. You start getting into yield mismatches and other difficulties. And of course, if you're leveraged 7 to 10 times, you can come down a long way. So if you're looking where this brush fire might begin, you might keep your eye on banks in Southeast Asia, especially in Singapore. So now the fundamentals are becoming clearer as we move into this date. But I made a note to myself, these are like watertight compartments. Most people out there listening to me probably don't really care much about the art market, private equity, and some may maybe care about bonds. But the last crisis, everybody has real estate. And when real estate came down, that hurt consumer spending. So I don't believe this is going to be a major crisis for the history books. I think it's going to be limited to certain areas, and the real estate and stock markets will come down, but I don't think they'll crash.
Okay.
And you had asked me about oil, Larry?
Yes, sir. I've got your oil chart up right now, so fire away.
Well, I start here. That is a graph of the average expected return for oil in any month going back to 82. So it's the probability it's up multiplied times the return. And as you can see, we're moving into the strong quarter of the year, January through April, and we've gotten through October, November, the two weakest months. Those are what I call static cycles. They don't change very much, but the one below this is extracted from the latest data. This is every other cycle that's currently active. I just reran this. There are 13 cycles, shortest 44 days, longest 7.8 years. The average of all of them is 1.18 years, and the next high here is projected to be April 5. Well, let's just go back up and look at the histogram. When does that histogram peak out but in April? So the long-term cycle says the next serious high is April 5. Now, if we go down one page, we see the oil short-term cycle. This is 5 cycles made the cut. In other words, the program tells me which cycles make money after statistically extracting them from the data. The shortest is 5 days, the longest is 60, the average is 24. So the next high is December 17th, which will probably just be a retracement rally or a sideways movement. So I've got oil, I've got a couple projections to $60, $64. That's where I think oil is headed, and that is certainly backed up by the oil equities, which are all very strong. And I don't know if I mentioned, I did buy RIG, Transocean, RIG, down around 10 and change with, I think it's 13 or 14 now, but that stock is still oversold. The fundamentals are okay. It's just been beaten down. And if you're reading my newsletter, back in the year 2000, when the oil rally started, that stock went from about 10 to about 70. So that's how oil looks.
Did you have much, camaraderie with your friends when they were in Vienna for the OPEC meeting? Did you get to see a bunch of your old contacts?
No, I just got back from New York.
Oh, you weren't in Vienna when they had the.
I got back just before that. And I don't know who was here and who wasn't. But they used to call me from CNBC Europe, and I used to go there and stand outside and freeze, because there's very heavy security.
I remember that, yeah.
And I would say, tell that guy to take his hat off. And I'm there with my no hat on in freezing weather.
Yeah.
And one other note on oil. The short-term behavior was also very positive. Oil rose in the last week of November. Normally in December, oil's up, I think, 19 out of 32 years or 19 out of 33 years. However, if it is up in the last week of November, it has risen in all months of December 12 out of 12 times. So the action in the last week of November is confirming everything I'm telling you. And here's where I'm getting, you see how one confirmation piles on top of another. And this is where this is why I overweight when I get this type of confirmation.
Okay, we've got to take a little break here. Will you stay with us?
Yep.
We'll be back in 3 minutes. Thanks, Bill.
Okay.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender. It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, the next one we're looking at, I guess, the cover of a magazine in German. Is that right, Bill?
That's Der Spiegel. And Contrary Opinion, as most people listening probably know, was, I think, developed by Humphrey Neal, who wrote the book The Theory of Contrary Opinion, which you can read in about 45 minutes. And the greatest exponent of that was Leon Fraser, who was an American diplomat. Now his son, James Fraser, who still runs the Contrary Opinion Forums, is in Vermont or New Hampshire every year. But anyway, Paul McRae Montgomery, my late friend from Newport News, Virginia, did a study of 3,200 covers of Time magazine, and he found out if there was an investment-related picture or story on the cover, that within 3 to 4 months, the direction of the prices would go exactly reverse to that which the cover suggested with 80% accuracy. So here we have Europe's opinion of Donald Trump's effect on the world, which I regard this as bearish. They're calling it the end of the world, so I'm saying I think that's bullish using Contrary Opinion. So anyway, yeah?
Go ahead, Bill.
Let's go to the month of December.
Okay, there we go.
That's the average of all months, 1885 to the present. And there is this well-known second week weakness, which is actually usually led by the semiconductor stocks, and most people say it's due to tax selling. They want to get their losses booked for the year. That decline that you see from about the 8th down to about the 19th only occurs 50% of the time. So it looks a little more formidable than it actually is. And it can be overridden by other cycles. So if we go to the chart just below that one, this is the behavior of the Dow plus or minus 30 days from a Mercury-Sun conjunction in Capricorn. And this is an interesting story, because it was developed by Ed Dewey, who was the founder of the Foundation for the Study of Cycles. And he wrote in 1970-71, just as I became a member, I've been doing this for 30 years, and as far as I can see, the planets govern or control all of these cycles just before his passing. And he wrote an article called Mercury and Stock Prices, in which he said that when the sun is conjunct Mercury in the 10th sector, he meant the 10th sign of he wasn't allowed to say Capricorn, because they lost funding. But he said that in the 21 days prior to the conjunction, that the stock market rallies about 89% of the time. Well, his data ran from 1915 to 70. What you're looking at is from 1885 right through to the present. And that's 84% chance of a rally. It occurs on the 28th. You deduct 21 days from 28, and you get tomorrow. And so this, I believe, is going to override that second week weakness in the December that I just showed you in the prior graph. At worst, I think the market might go sideways. But then you're going to have this pointing up, and you're going to have the natural, the market is up 70% of the time during the same time period you see on the graph from low to high, but here it's 84. So you get an extra 14% by being aware of this. This occurs, by the way, about once every 2 years, and it can only occur between December 20th and about January 19th because the sun has to be in Capricorn for this to occur. So that is, I believe, the most important cycle over the short term.
That's fits in nicely with the January effect too, doesn't it?
Yeah,
where
well,
stocks have a tendency to rally in early January.
Yeah, well, the average high is around somewhere between January 3 to 7.
Mm-hmm.
And if you
So
go,
that would fit in nicely. Very good. Yeah,
it does. Now, if you go down one more, this is the histogram of all days in the Dow daily from 1885 in years ending in 6 that are also election years. And you'll see where all the gains are concentrated, 22 to 29. And if you look at 24 and 6 and go look at the left, those are actually 100%. In other words, there have been no December 24s and 26s in years ending in 6 that are election years that have been down.
Mm-hmm.
So
well, that's
it looks
an
very
amazing
bullish
statistic, isn't it? Yes.
for the end of the year. But things are starting, storm clouds are rolling in. The market has to correct sometime. And, well, let me go through these bullet items.
Sure.
Are you the head of the Federal Reserve now, Larry, or what?
No. I listen to you, buddy. I don't trust those dudes over there. So,
well, the market.
You want to talk about that correction in January? Is that what you want to talk about?
Well, seasonally,
okay.
Here we're on page 6. I've listed a number of bullet points. The market seasonally usually corrects after January 7th, although it can be as early as the 3rd. The 1-4 in the 10-year cycle that has been so accurate last year and is still pointing up tops out on the 17th, indicating a correction. So that's January 3, 7, 17. And we're going to see a graph down here where the monthly S&P is beginning to diverge from its momentum. Number 4, the month of February following an election year has historically been the weakest month in the entire 48-month cycle. That is right out of Arthur Merrill's book, Behavior of Prices on Wall Street. I was really struck when I first looked at this back around 70, 71. And we just ended an earnings recession. After 7 down quarters, remember I said the BAI index is bottoming at the top of this, at the beginning of the show. So all the numbers are not in yet, but we've had 7 consecutive down quarters, which I think is the second longest recession in 70 years. But the S&P index has tended to run up in anticipation of such events. And if you have 5 down quarters and then the earnings recession ends, the market has tended to be lower about a quarter later, about 60% of the time. So in other words, just as the good news is hitting, the market is tending to peak out. And in terms of sentiment, I have a sentiment red light. The National Association of Active Investment Managers reveals that the average money manager is nearly 100% exposed to the stock market with a very low standard deviation. So the sentiment, and now let's just go and look at the monthly S&P.
Okay.
And you see we've hit a new high, but look at the momentum. The red line, the momentum line, has started to turn down. That's a pretty monster divergence, but I don't think that can really get to us until January. I think we're somewhat insulated from that for at least the next 3 to 4, 4 to 5 weeks.
Can I ask you a question?
Sure.
Bill, when you talk about your momentum, are you looking at new highs to new lows? On momentum, in other words, the number of new highs being made versus new lows?
Oh, momentum, that's a price momentum indicator. If you look, it says departure analysis. I can't really read it. It is a 5-period moving average minus a 15-period moving average, taken as a 3-period moving average to smooth it.
Okay.
And that was developed by Ian Notley way back in the 70s and 80s. They tested out all combinations, and this is what worked, although other people have told me that 10 and 30 are now working better.
Uh-huh. But you're still seeing divergence. We're seeing the same thing.
Yeah.
Also, by the way, our friend Arch Crawford said to say hello to you. He's going to be my guest on Monday, and he wanted to send his regards to you. So we're going to have to take a little break here in just a second.
Sure.
Tell the folks how they can reach you, and then when you come back from the break, I want you to cover this last two charts that you have. But you're in Vienna, Austria, as I recall?
For the next 2 days, yes.
Then where are you going?
Middle East.
Oh, boy. You travel more than most airline pilots, Bill.
I don't think so, no.
Okay, listen, we're going to take a little break here, buddy, and we'll be right back with you, okay?
Okay.
Thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Meridian of Cycles Research. Bill, we've got just a few minutes left. You want to run through that first chart, and then we'll get into Donald Trump's horoscope, and then also...
The month of February has been down, in a post-election year, has been down 59.4% of the time. So you have the graph right here. You can see it's the weakest in the entire 48-month election year cycle. Mm-hmm. So President Trump, I think the key month here for him in the coming next year will be August 21, 2017. There is an eclipse at 29 Leo. It's going to fall right there, only 2 degrees, 3 degrees off of his Mars. Mars, as you know, is action. It can be violence. It can make him much more active than usual. It's at 29 Leo, which is on the fixed star Regulus, which is one of the 4 royal stars of Persia. When that eclipse fell there in 79, it's when the Shah fell from power. So, therefore, there is a direct connection between that eclipse and the jaws in Persia, which is now Iran. If we go to the next chart, this is the Iran-USA nuke deal, which was a giveaway, actually, that was signed July 14th, 2015 at 11 a.m. here in Vienna. I was sitting in front of the TV and took the time down as they announced it. This is a dreadful-looking critter with Venus at 28 Leo, but Venus ties into Mars, Pluto, and Saturn, and this is not a pleasant combination for those people out there who are into this. Venus equals Saturn equals Mars, Pluto. This hardly looks peaceful, but the eclipse will land on the Venus, and Venus does rule treaties and agreements. So eclipses, solar eclipses start having an effect about 90 days in advance. You take 90 off of August, and in May you should start hear stirrings about the new administration not agreeing with this and wanting to change it, which they'll start jousting with Iran, I do believe. And also I use the 18 and 54-year cycles. Every eclipses run in Saros cycles. There's one in a given cycle every 18 years. But every third one is more important because it is visible from the same spot on the Earth. In other words, if there's an eclipse where you are, Larry, 54 years later, you'll see another one. That's maybe the basis. Well, I'm pointing out that Reagan and JFK were shot on the last 2 repetitions of this cycle.
Hey, buddy, thanks for being on. We're going to have you on again soon, and travel safe on your trip.
BillMeridian.com, Bill at CyclesResearch.com.
Okay, we posted it online. Talk to you later, buddy.
Bye-bye.
Thanks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.